Good day to everyone. This is Dr. Sivaraman of iknowindices.com. Let me continue the part 2 of tracking the forex market together. And I gave the part 1 between 9 and 9:45 GMT, and also gave you certain calls with regard to the trades and how exactly the technical trade could be done in some pairs, and also the basic trading strategies can be deployed in some other pairs. And we will review what happened to those positions and whether I was able to book profit and or whether they are hedged and things like that. And also we will review the high and the lows in each pair we have watched from that of the European session. Then based on the market moves, we will decide upon the next trade for the US session. So it is 14 GMT, 30 minutes past of the US session start. So you come across either high or the low or not been breached in the case of Euro and GBP. So we will just review first of all what happened to that of the highs and the lows. So let me focus the PowerPoint presentation over that of the live market quote page. Currently Euro is trading around 1.2693. 1.2695, the bid and the ask. The low is 1.2644, which is intact. I showed you during that of the European session tracking the forex market together webinar that what are the initial lows and the high. The initial high was 1.2700. They breached the low and then they are holding it below that, but still they are not cut the low. So it is actually an intentional move because all the majors, especially Euro GBP, USDN and USD they showed the positive net change, and followed by that, they showed USD weakening move in the case of USD CAD and also Australian dollar. That was the initial condition during that of the Japanese session as well as during that of the US session. If you watch during that of the US session in first 30 minutes, that still USD CAD is showing negative net change and Australian dollar is showing positive net change, and they are not breached the lows by any chance in first 30 minutes. And only in the case of Euro and GBP, they are showing nominal negative net change. Especially we know very well in the case of GBP, they try to make the moves in such a way to create the fear or the market sentiment, and subsequently they act against that of the traders. So keep that in mind. If you review it, they breached the initial high in the case of Euro and GBP, but also they breached the initial high in the case of the denominator currencies like USDN, USD CHF and also USD CAD. So they are still holding above those levels, and it is a typical contrarian move. Now you find excepting GBP, all other currencies are showing positive net change. And GBP will also, they will try to catch up after gaining the levels in the case of Euro USD. And you know that they are trying to do this in order to gain the levels in the case of Euro GBP, and they are expected to go above that of the high. And initially, you know that during the European session, it was very subdued, holding about 19 pips positive net change. And now only they are trying to come closer to that of the high, and it is weakened, so they will try to make an upward stop and as well as a downward stop. And so accordingly, they are making the moves of gaining first in the case of Euro, and subsequently they are expected to gain the levels in the case of GBP. They are all meant for swing trades. I am not giving any long-term calls here. So we are trying to track the market and try to focus on the swing trades. So let me go back to that of the PowerPoint, the PowerPoint presentation, and review what happened to that of the trades what I have proposed during that of the European session. So these are all the positions what I have taken. So this is European session. I just want to change it. So I took a buy in the case of Euro 1.2736 with an entry stop at 1.2696 below that of the initial high. The initial high during that of the Japanese session formed around 330 was 1.2700. At that time, the initial high in the live market quote page was 1.2700. So since it was holding above that of the initial high, I took a technical trade, and after completing the discussions, I took at market a buy position 1.2736, and during that of the late European session, it was a technical trade. I kept the entry stop, and during that late European session, they dropped and hedged me, and going below that little bit. So I kept stop at entry at 1.2696, and then later on I identified that they are not going below that of 1.26902688. Then I closed the hedge position at 1.2690 and made about 6 pips profit, and the entry stop was placed 30 pips below. Still I am holding the position. I only closed the hedging, and the buy is at 1.2736 and the sell is at the hedging order is at 1.2660. Now it has come above that of 1.2703, and if it sustains above there for more than 30 minutes after coming here, then I will try to move it to that of 1.2696 level. Then once the position makes profit, I will try to book profit on the upside. Similarly, in the case of GBP, at market I took a buy position 1.5462. The high which I set was 1.5465. In fact, just 3 pips short of the high, I had taken a buy position at the market, expecting I will be able to keep a stop at entry as a technical trade, but they have been holding around 1.5455, but they never came above that to keep a hedging or keep stop at entry. But still, I have got an entry stop to limit the risk, 1.5430, so I have not become impulsive. And I know that if they drop, let me just book profit on the hedge side. So they dropped below that of 1.5430, and that was filled, and which was placed below that of the initial high, 1.5434. And then once they filled the hedging order, they immediately dropped further. I kept stop at entry. It came down to that of 1.5388, 1.5389. That's how they have been showing it. So I closed the hedging at 1.5396 using a trailing stop of 34 pips and kept another hedging order 30 pips below that of the market at that time, 1.5360. Now they are hovering around that of 1.5388. Once they go above that of 1.54, I will trail it to that of 1.5396 level, so that I will just reduce it to another 30 pips, and once they go above that of 1.5430, I will try to keep stop at entry. So this trade is also pending. The hedging position, which was filled, I booked profit in the case of Euro and GBP, and still the buy position, I have not closed it. I know it is Friday, and the forecast says that there is going to be a gain in the case of Euro and GBP. So I am just limiting the risk, keeping the hedging order, and still holding the buy position. So here you find that I am trying to do either way trade, booking profit on the downside in the hedging, sell side, and also trying to book profit on the upside, on the buy side, or at least try to close the buy without a loss. Then, in the case of USD/CHF, I was telling you that they are making contrary move. If you see now also, excepting GBP, they have gained the levels in the case of Euro, and it is sustaining with 12 pips positive net change, and GBP 41 pips negative net change, and USDN they gained about 46 pips net change, and also in the case of USD/CHF, 83 pips positive net change is seen. So because of that, you come across Euro/CHF has gained significantly about 140 pips, and then currently it is holding above that of 1.300. So USD/CHF 1.0237, I took a buy position, and the hedging was not filled, and then it went up, and it was again a technical trade because the initial low was 1.0225, and then I kept the entry stop below that of the initial low, and then subsequently they went up to 1.0276. I closed it, and then with a profit of 39 pips. So this trade was closed. Then USDN again 83.94. It's a basic trading strategy. Buying is the CHF was a technical trade, buy above that of the high, because Euro and CHF both they showed a positive net change. So I know that they wanted to make a contrarian move. That is why I took a buy position above that of the high. And in the case of USDN, I did a basic trading strategy because the initial low was 83.78. They came down to 83.76. Then subsequently went up. So after completing the top, I was able to take a buy 83.94 with an entry stop of 30 pips, and then which I closed it around 84.32 with a profit of 38 pips, and they went up to 84.36. Then Australian dollar, the buy position was at 92.44 with 30 pips hedging order, and it went up to 92.66, and then subsequently they are not raised it around 11:45 GMT. So immediately I thought that I should grab the profit because GBP they hedged me, so I do not want to take any chance. So I simply closed it with 21 pips profit. Then subsequently you find that Australian dollar has fallen. It came down to 92.37, and again it is firming up. You find that it is 92.56.59 level. Then in the case of Canadian dollar, I took a buy position at 1.0313 with a 50 pips hedging order, so that will fall at 1.0285. The low which is formed is 1.0289. So they breached the low and subsequently rised, and now you find that they breached the high also 1.0344. That was the initial high. Then I closed it around 1.0333 with a profit of 18 pips. And in the case of GBP yen, I took a buy around that of the market level 129.63 and went up to 129.88, and then I closed it. Then in the case of GBP Euro yen, 106.84 I took it, and it went up towards close of the European session. Then I booked about 29 pips profit. And in the case of Euro GBP, I took a buy around 82.49. That was almost closer to the high, 82.56. At that time, they breached it. Because why I taken a buy position in the case of Euro GBP? Because they showed more positive net change in the case of Euro and less positive net change in the case of GBP. They have been sustaining it. So I know very well they wanted to gain the levels in the case of Euro GBP. But they have been focusing on Euro and GBP and other currencies, majors. They are not making much moves in the case of Euro GBP. It came down to that level of 0.8235 and then hovering around. Now it is showing a profit. It has breached the high of 0.8256 and formed a new high 0.8258. Currently trading around 0.825760. 30 pips positive net change is seen. So I will try to keep stop at entry once it makes about 15 pips, 20 pips profit. Otherwise, close it with a nominal profit in case if you want to close it as an intraday trade. So there are three pending positions. Euro, I am having a pending position. GBP, I am having a pending long position. And Euro and GBP, I have a pending long position. This is the review with regard to the positions what I had described and how exactly we can take and close them. And I'm not recommending to take position in all currencies simultaneously, and you have to focus only one currency at a time and try to book profit, then subsequently review and try to take another currency. Because if you try to take position in all currencies simultaneously, your equity may not be permitting it, and you will be taking more risk and over trading. Then that may lead to, in case if the market moves against, it may erode the usable margin substantially. So only for that understanding purpose, I showed it how exactly when they are making such moves, contrarian moves, We can do a technical trade or we can do a basic trade, and also we can do a contrarian trade, buy in the case of euro and buy in the case of CHF. That sort of contrarian move we can try to do it. So let me explain with regard to the session timings. Now your session starts by 13:30 GMT. We are at 14 GMT. After past 14 GMT, so you find still the low has not been breached. So let us try to take the basic trading strategy. What's the forex market in all 6 pairs, 4 majors and 2 commodity pairs, 30 minutes from the start of the session, 30 minutes over. Then take a sell position if a pair is near the high, or not cut the high in the 30 minutes of observation. Whereas during the European session, they breached the high and sustained above that of the high. So I went for a technical trade of buy above that of the high and try to keep the hedging order below that of the initial high. Then, in the case of euro and GBP, I was not able to book profit. On the downside, I was able to book profit. Still, I have got the hedging order to limit the risk. I will trail it upward. And now in the case of euro, I can trail it up. And in the case of GBP, still I'll wait for some more gain to 1.54 level, then try to trail it up. Then, now current situation, euro is trading around that of 1.2709. Again, it leads to a technical trade. Actually, around 14 GMT, it was around that of 1.29, 2690. That was a very good buy opportunity. But because they are not breached for the first 30 minutes of the session start, then we can straight away try to take a buy position around that. Then, once you take a position, immediately keep hedging order or entry stop. Don't take any unlimited risk, and however way you try to estimate that the market will go up or come down and things like that, even if you are 100% sure that market can go up, still they cannot take the risk, because any untoward thing can happen in the world and that may reverse the market at any given time. So you cannot afford to take unlimited risk, and in case if any sudden eventuality happens, immediately the market might develop an opposite trend. So one has to keep that in mind, that we cannot afford to take such chances and say that my account was changing order. So try to trail the stop in the profit making position, and if they are going upward very fast, then rise it to 45 pips away from that of the entry, or 75 pips, or even up to that of the 102 of that day. Then I'll explain about the advantages of hedging later. Then in this year's session, euro and GBP are expected to swing and rise for weekend. So let us decide upon the trade calls. So euro is, I'm holding already a buy position 1.2737 with an entry stop at 1.2666, and now we can move it to that of 1.2696, because currently market is trading above that of 1.2706. So I have moved it to that of the initial hedging order level 1.2696. So hedging order is moved. So if they drop again, still I'll only block 30 pips, and I already booked about 6 pips profit on the sell side. So I don't mind cutting 1 or 2 pips profit in case if they are hedging it, or I'll try to keep stop at entry and close the hedging order. Depending upon the move, I'll try to take decisions on the hedging order. If it is not hedged, I'm using it instead of a stop. I'll try to keep stop at entry. So I have a plan. The market comes down, what steps I have to do or take, and if the market goes up, what are the steps I have to take. So like a machine, I'll be working. So my emotion is not going to tell me that come on, go and sell, come on, go and buy and this sort of thing. So no gut feeling and things like that. So here we only use the strategies, and we try to assess the market from time to time and use the strategy which are already defined. I explained all the strategies in my trading system webinar. If you go through that, you will be able to understand how exactly the hedging can be effectively used for various types of trades. I'll also explain at the end of the webinar about the advantages of hedging and how it can be used also for the newcomer. Then with regard to the GBP, I have already a buy position 1.5462 with an entry stop at 1.5367 because I kept about 30 pips below that of the market hedging order, and now currently GBP is trading around 53.89, so I am just holding it. Once it goes above 53 or 54, then I'll try to move it to that of the 53.86 or 53.96. Slowly I'll move it, maintaining about 30 pips from that of the market. In case if they hedge me, then I'll calmly wait for 30 minutes. And if I am well versed with the hedging trading, then probably I'll wait only for 10 minutes. And if the hedging is not making profit or loss it is making loss during the 10 minutes of observation, I understand during a brief downward stop and they have filled my hedging, I'll try to close it with a nominal loss of 1 or 2 pips or keeping stop at entry. In case if the hedging is making profit, I'll try to keep stop at entry and watch how far they are dropping it. And a good trade practice is, this is the second level hedging. So if they continue to show profit, then I am on the wrong side. I decided I am on the wrong side. So I'll either wait for the market to come up in my way and then close it with a stop at entry. Then I'll continue with the buy position trade. In case if they continue to drop, then I will try to close my buy side and try to maximize the profit on the sell side. So I have the plan on either side of market moves. So I'm not really worried which way they are going to make the move, but still I read them. So which gives the comfort zone for me to move the hedging order and try to see how exactly they are going to achieve their objectives. As I explained during that of the European session, they wanted to make the intentional move during the day. You know that during the Japanese session they gained all the way, and subsequently during the European session they gained further up, and they have been holding there above that of the initial high. Towards close of the Japanese European, they made a brief downward move but did not cut the low in first 30 minutes, indicating that it is a small swing for the weekend close. Initially the long holders, they wanted to liquidate, and then subsequently they gain the levels. So whenever the long holders liquidate, they are buying it and again gain the levels all the way. That is how they wanted to gain the levels here. So I understand that the move is intentional move. So accordingly I take my positions and try to trade. So I use the forecast to take trading decisions and also read the market intentions to take the trading decisions. Regarding the intentional move, I have given in my trading system webinar the explanations. Probably if you understand, and then it will be easy for you to follow on what basis I take the trading decisions. And in the case of CHF, I don't have any position, and currently it is holding around 1.0228, 1.0231 level, and the initial high, I'll show it with the help of the Asian system. Initial low on the highs chart. So here you come across intraday highs and the lows which were recorded between 2:30 and 3:30 GMT or around 3:30 GMT. You can make a note of it. Euro, that is what I was referring to today, 10th of September. 1.2700 is the initial high. They have breached and again it has gone above. In the case of GBP, still it has not gone up. They are trying to handle Euro GBP. Later on they will come to that of GBP as well from that of the mid session. So at that time I will be able to keep stop at the entry in my buy position as well. And USD CHF initial low was 1.0223. They are not gone below. So we can take a buy position at 1.0232 or 31. Then in the case of USD Yen, they gone above that of 84.27 and gone below that. It went up to 84.36 and came down below that of 84.27 So we can only do a sell and buy trade, but it will be very nominal drop because the net change is 46 pips positive. So I will not take any position here. Because it was near that low, I took a chance of taking a buy. You know that N is making a nominal swing nowadays. So all through the week, they have been holding around that of 84 to 83 area. And just if you make an investment or take about $1,000 or $2,000, give as a equity to take position, you should be able to give some return. And if you simply stopping it out entry or cutting it with a nominal loss, it is of no use. So we have to decide which currency is got the great potential to give profit. Then those currencies alone we should try to take without any sentimental attachment to any currency pair. Then in the case of Australian dollar, 0.9238 is the initial high. They breached and they came down up to that of 92.37 and then gone up. Exactly by 13:55 GMT, they came to 92.37, just 1 pip short of below that of the initial high as a false move, and then they have gone up. Now it is trading around 92.59, and still they are not breached 92.66. Gradually, I am expecting them to breach because it is an intentional move. Around 15:30 GMT, they are expected to breach the high. So they will induce all the long holders to liquidate the long positions out of nervousness for weekend, and then subsequently they will gain the levels. Then the short sellers in this week will come for short covering. So let me go back to that of the slide with regard to the position taking. So USD CHF 1.02 gone up already 38 with an entry stop of 30. See, about 5-6 steps near that particular level, what you have decided is not a big deal because we have got a hedging order to limit it. In case we find that we are just taking it at a higher level, we can make the hedging order as 35 pips also. That is not a big deal. And USDN, I am not trying to take a position. Australian dollar has come closer to the high. It is still holding above that of the initial high. During a small dip, we can take a buy. So, because the upward scope is limited in the case of Australian dollar, they gained about 31 pips. So, probably they can go up to, you know that currencies, the commodity pairs, they lead the rally and lag behind. So, then the players will focus more on the majors like Euro and GBP and probably keep Australian dollar in sideline because they already gained the levels in the case of Australian dollar. So it could give about 20-30 pips profit taking opportunity. So probably we will try to keep a buy limit order 0.9245, just about 10-12 pips below that of the current trading level because they are coming up to that of 90 to 56 and then going up. Let us see whether they will make a small dip and then go up. In case if they are not coming, then we will try to buy it around 90 to 55. And once the position makes profit, we will keep stop at entry because we are trying to take the positions around 14:30 GMT. Actually, around 14:10 GMT, if you try to take a position, then it will be very good. Then in the case of Canadian dollar, the initial low was 1.0313. I showed it, and so they are holding it around 1.032529, and negative net change of 12 pips is seen. They made a downward stop in the case of USD CAD below that of the initial low and made an upward stop that is 80 to 49 with an entry stop of 50 pips, and already they have breached the high I showed you. 80 to 58, 56 was the initial high, then subsequently they've gone and above that 80 to 58 and now 80 to 63 is the high. They are still holding it, and if they gain about 20 pips away from my buy position, I'll try to keep stop at entry and then try to maximize the profit on the upside because they are showing positive net change in the case of Euro and negative net change in the case of GBP. So they wanted to gain the levels and make further upward stop in the case of Euro GBP. Then subsequently they will gain more levels in the case of GBP holding Euro. At that time Euro GBP is expected to drop. Then we can probably from mid session take sell position in the case of Euro GBP. This is how we can participate in the market going along with it of the intraday trend by looking at that of the net change, whether it is in the positive territory or in the negative territory, etc. So these are all the positions for that of the European session. There are 3 and 4 positions and 2 limit orders are being kept, and we have to see whether they are going to be filled. Then I'll explain with regard to the hedging, the advantages of hedging. That is, in case if a position is being hedged, and we are using basically the hedging instead of a stop as soon as the position is taken. So that is the first step. So why we are not using stop when the position is making loss as soon as we take the position? Because we do not want to just like that lose the position, and we want to apply our trading strategy and try to earn from that particular position. Then secondly, if we use the stop, if the stop is hit, then the position will be closed. We won't be having any position and loss will be realized. Then probably you may not have the mindset to relook at the market and enter into that other market. Instead, you will become nervous because the money is lost and you hesitate taking a position. At that time, your decision might be correct, but you don't hold any position. So, what has to be done in case if the position is hedged? As I explained in the case of GBP, I was taking a buy position and kept the hedging order, and the hedging order got filled. On the downside, I found that beyond that particular level, they are not dropping it. Then I see that, okay, that is the support, intermediary support they are trying to establish, and below that they are not dropping. That means most of the stops are below that, or most of the traders who have taken the sell positions are below that, and they do not want them to book profit, because most of the time the traders sell after the drop or buy after the rise. So that sort of scenario the players know very well, and they drop only to the intermediary level in order to handle the crosses and then subsequently gain back the levels. So in such a way, then we can go in for an either way trade, book some profit in the hedge and keep another hedging order to limit the risk, and then try to trail the hedge upward till such time we are able to keep stop at entry, then try to book profit on the buy side as well. That can be an either way trade. And the hedging can also be used for a reversal trade. I told you, when the second time when my hedging is being filled at 53.66, instantly it happened to be the low. 53.67 is the low for today. So in case if they hedge me, then I'll watch for 30 minutes to 2 hours, and during that time, if it is making profit, then I understand I have taken a wrong position. I'll accept the loss on the buy side, and I will try to earn that lost money on the sell side, so that I will have a break even. In case if they drop further down, then I'll maximize the profit and get net profit for the day. So this is how an objective trading is being planned. So obviously, when I lose, I don't become panic, or when I get the money, or when the position is in the money, I don't become greedy. I try to use only the trading strategy. When the position is making profit, I use trailing stop and limit, and when the position is making loss, I use the hedging to limit the risk. So at every time, we try to either limit the risk or try to protect the profit, and we don't manually do this, and or probably we don't keep any mental stop and things like that. So that is very, very important, because many people keep in mind that because you come across frequent stop under the market, it is better to keep a mental stop. But many of the occasions what happens, they quickly drop or quickly rise the market, and sometimes if you don't keep the stop, it may not, you might find that equity erodes just like that, then invariably you will get struck. And now you come across the wide range swings, that is, Euro is trading around 1.2650 to 1.2750, GBP around 1.55 to 1.53. You think that market is going to be range bound. That is how they make the market appear as if there is lack of volume and range bound moves are there. So the traders will try to buy after the drop and try to book profit afterwards. they will develop the tendency to short. On the downside, they wanted to earn back the money. So, at the lowest level, buy and sell is sensible, but sell and buy will be riskier. But when they make such wide range swings, it will appear it is a very good trading opportunity. Then once you take the sell position, they simply trap it and go higher and higher. Last time you know that many of the traders got struck at 1.27, 1.28, 1.25 like that, and they went up to 1.33. In the blog you can see in the past archive of the blog how many people asked whether euro will come down, GBP will come down and things like that. Why? Because they continue to do the swing trade and get trapped vulnerably when they make further rise. Initial rise, it will find, okay, it is only going to that of the resistance, then afterwards it's going to drop. They will add further sell, thinking that we'll go in for an averaging of the sell and try to earn money. But later on, they realize that they have done the overtrading of taking too many sell positions against the market. So this is how they make the traders to become addict and then trap. So it is not easy task, no, to trap anybody because all will be alert. But if they induce them to develop it as a habit of do a buy and sell trade and sell and buy trade and things like that, then obviously they will find immediately this is a great opportunity of sell, then get trapped vulnerably. That is why at the lowest level, I inform in the blog also, don't try to do sell and buy trade. Probably it might look lucrative or it might look like a very easy trade, but if they trap, then we will be at a great danger. If you use the hedging, then either way trading can do it. There is not a deal at all. Then hedging is used to hold the position, continue trading when the time permits. Say for example, somebody last time, they had taken a sell position at 1.27 and with 1.2730 as a hedging, the market went up to 1.33. He is not bothered. And the buy side, he can book profit or he can simply keep stop at entry and wait. It has come down, and once the hedging order is closed with stop at entry, then on the downside you will be able to see the profit. Probably the waiting period might be about 15 days to 1 month, but still every position will be able to book profit if you use this particular type of trading strategy. So we need to have the contingency plan for a long term as well as short term, understanding the overall market cycle, because they cannot take euro and GBP to the infinite level on the upside or to zero. Because you take huge positions, then when the usable margin errors, you think that, oh, they have dropped about 150 pips, 200 pips like that. But actually that is a daily gain for them. If you see the spread, at the end of the day, the spread between the high and the low will be around 100, 150 pips on a daily basis. And also if you see the net change, sometimes you will find that it is going to 150 to 200 pips and things like that. So that is a daily affair, and making about 2-3 days drop or 2-3 days continuous rise is not difficult at all for the players. But only thing is, after making such moves, they should be able to earn money from that other market. And you would have noticed on Thursday, a lot of people were waiting that after the BOE interest rate decision, that market is expected to flare up. But they did not show any action on that market. And subsequently, they made the rise. So, you cannot just like that think that there is no strength in the market at any level. And you know that GBP went up to 1.55 after that. Then, so you have to keep always in mind that if they don't make any move, it doesn't mean that there is no strength. If they make a big move, don't think that it looks very, very strong. Don't make such comments, and invariably it will try to induce your mindset to go in for a higher level buy and sell trade in such a situation. Okay. Hedging can be used to spread the risk in the event if you are doing a position trading. That is, every 150 pips on the downside, you try to keep a buy order and keep 30 pips hedging order. And that if they drop at the end of the month, you just profit on the hedge as well as keep the hedging order to limit the risk on the buy side. The next month you will find they will rise it up. At that time you will be able to close all the buy positions either above their average or as and when they book profit. This is the easiest position trading strategy, but many people don't have the patience because invariably they have to expose at a given time around 1% of the equity. And many people think that if I trade many lots, then I am small. It is not at all like that. You are all here to earn money from the other market. Whether it is a big lot or a small lot, ultimately, if your strategy works very well, you will be able to earn. Once the strategy is being perfected, then you can go in for a big lot. There is no big deal of losing big money and say that I lost about 100k. Nobody is going to think that you are a rich man. And they will think that you are not disciplined yourself. That's all. Then hedging can also be used for the breakout trade in case if they cut the high and go above or cut the low and go below and stay there for more than 30 minutes, then you can do a breakout trade. What I explained in the European session, similar trade can be done. Then in that case, you can just use the hedging below that of the initial high. In case if they come down, you'll be able to book some profit or at least close it with a break even. So you don't have that feel that at the highest level I have taken a buy position or lowest level I have taken a sell position. Then once you use the hedging, there is no additional margin taken by the platform. There is another advantage, and it is like trading in two lots. So on the buy side you book some profit, wait and book profit on the sell side. So that it is like taking two lots but with one lot margin. These are all the positions. I am holding 1.2737. Still it is holding around that of 1.270911, and the GBP is also holding 1.538589 level. Still it has not gone up or gone down. And yen is also making subdued move. And Swiss franc, I took a buy around 1.0238 and it has come to 1.0233 level. Then Australian dollar, I kept a limit buy order 1.9245. They have not come down. So currently trading around 1.925760. So I'll try to modify it and keep it as 1.9255. Just increase it by 5 pips, 10 pips, so that we can see whether they are filling it. Otherwise, you can try to take at the market, because still they are holding above that of the initial high. Will come across suddenly they will start gaining the levels, even though there is no data release and things like that. You might be wondering when there is no trigger in the market, how the market can move and things like that. If there is no trigger in the market, keep in mind the players can create rumors as the trigger in the market or ask somebody to make statements. So don't think that there should be a scheduled trigger necessary for the market to move. And for example, on Thursday 11 GMT there was a scheduled data release, but they did not make any move. So very similarly, when there is no data, it doesn't mean the market has to be subdued. It can still make the move. And simply say that stock markets have gone up and in tandem the currency market has also gone up, and they will try to give the relationship between them and gain the levels. Or they can simply say that gold has corrected, so currencies have gone up, and they can give any sort of interpretation. So keep in mind that the triggers can be in the form of data release or speech, and also it can be rumors. Then in the case of Euro GBP 82.49, I am holding a buy position, and gradually it has come to 82.6164, which is making a little bit of profit, and I can keep stop at entry here and maximize the profit on the upside, because as long as they hold Euro in positive territory and GBP in negative territory, I'll try to hold the position, and then later on they will reverse, suddenly gain the levels. In the case of GBP, I'll simply close it, the Euro GBP position. Then afterwards they will reverse it. So let me minimize the PowerPoint presentation and take up the questions which are asked here. Okay, I have focused the camera over that of the live market code page and take up the questions here. So there are so many questions. I don't know whether I'll be able to answer to all the questions. Ranjit, Euro USD seems to be Euro GBP seems to be a good buy. Yes. And what do you make out of what is happening in GBP? So GBP, they are simply holding it in order to gain levels in the case of Euro GBP, and subsequently they are going to gain levels in GBP also. So GBP is the currency which is being effectively used in order to create the market sentiment. So when GBP they hold it low, then immediately people think that it's better to sell Euro, which has not dropped, and get trapped later on. Okay, so I don't think I'll be able to answer to so many questions which are asked here. I take a little more time to explain. Okay. Probably I should reserve the questions to the blog. Kindly post the questions in the blog. I'll be able to answer those questions freely. Because the time is up, the recording has to be completed. So I'll show the last slide. So you can take a screenshot and see the fate of these positions later on and ask questions in the blog. I am willing to answer those questions. So I take this opportunity to thank everybody who have come here to listen to my talk and to FX Trade for this lot. So I'll come again by next month and try to take the Tracking the Forex Market Together webinar. And meantime, if you got any doubt, you can send me an email, dr@i-knoindices.com, or you can contact me through MSN Messenger, iknoindices@hotmail.com. See you again on Monday during the Asian Session Live Market Analysis. We will continue our analysis using the Live Market Code page on a daily basis. Thank you one and all. See you.